Hello, everyone, and welcome back to our COVID-19 Power Lunch. It's been a while since we did one of these, so we thought before year end, we would catch you up on all things PPP, what's going on, what may be coming down the pike, and answer any questions that you might have as we're now getting into the forgiveness period, and a lot of people are applying for forgiveness, wondering how to plan for taxes, and all things related to that. Today with me is Mike Sibley, a partner in our Daytona office, and my name is Erin, a partner in our Gainesville office. Mike, let's start off with talking about actually applying for forgiveness. What are we seeing from the banks? How are people going about this? It hasn't been quite as smooth, I think, as people have wanted it to be.
Yes and no. I mean, in some cases, it's gone really well. In others, there's been a lot of confusion. And so hopefully maybe some of this will help as you get prepared. One of the things right from the get-go is the SBA came out with their draft forms, and those have been very, very helpful to help organize the thought process. But every bank has a little bit of a different website application, so in entering that information, and I think that has offered some confusion. And one of the key things is as you're working through the application process is all these different fields and what's required and what's not required. So let me give an example. So for many companies going 24 weeks, they've been able to actually just use payroll and just use the payroll to apply for forgiveness, so they don't need to provide utilities and lease payments and all the other non-payroll costs, because that's a lot of documentation to submit. And we've had a number of clients who have already applied just using payroll and have actually gotten forgiveness from the SBA. So I will say that the SBA is providing for forgiveness. We've seen those. But some of the confusion when you're getting into these bank forms is understanding that they may be asking for things like lease payments, like retirement contributions and things like that. And if your payroll more than covers it, effectively what you can do is put a zero in the field and then move on. You do not have to claim those expenses. You do not have to put those in if you have more than enough payroll costs to cover. And the reason why we've been focusing on the payroll cost is because it's been the easiest. You can provide the payroll registers, you can provide the 941s, you can provide those documentation components to the bank, and they can actually get through it very easily. So that's something we've been suggesting. Obviously, some companies have had to go further than payroll due to reductions in FTEs and meaning full-time equivalents and other things that have impacted them. But trying to focus on the payroll as much as possible. The other thing that's caused some confusion is you've got 24 weeks, you've got 8 weeks, but what happens if you meet it after 16 weeks? Well, you can still apply using the 16 weeks and put that information in. Now, some banks have said, hey, we're not going to allow you to apply before the end of your covered period because these certifications go through the end of the covered period. And that's understandable, but it doesn't necessarily mean you need all those payroll registers to help get through. You may just need to get those 16 weeks of payroll registers. So it's a good thing to talk to us about. That's what we've been helping clients work through, is understanding that. Now, some banks have even gotten to the point where they haven't actually allowed companies to start applying yet. You've got plenty of time to apply. This goes out, basically you've got until a couple of years, you're basically the maturity of your loan to actually apply for forgiveness. I know you're going to talk a little bit about loan payments a little bit later, but there's plenty of time. Some banks just have not gotten to that point yet. Some were waiting on possible changes from the SBA to come out later, which is actually possible. We may have a little bit of a revised process we'll talk about in a few minutes for smaller loans. So, but some of the key things that we've learned is how to work through the different weeks, how to navigate the banking website. So just to make sure that you understand, what we've been encouraging people to do is call us first before if you have questions or you're not sure. The other thing is it has been pretty standard that you have to get those payroll registers. And what's been the easiest is if you have a national payroll provider, they'll actually have a nice report that you can get covering your covered period. Look at it and make sure it's accurate. Some of the things that the way the reporting function works is sometimes the FTEs, the full-time equivalents, aren't reported correctly on there because maybe somebody voluntarily terminated and meets one of the exceptions. Well, that doesn't count against you Probably, although we'd want to talk to you about that and make sure that you do in fact meet the exception. So those reports are great, and then you can even add into it the weekly reports to supply into that. So that makes it very, very simple. Those that are national providers, like the QuickBooks payroll reports, put those 941s in there, put those quarterlies in there. And the other thing we're asking is make it really easy to understand. When you have owner wages, the owner wages have limitations that are different than the non-owner wages. And we're putting in kind of reconciliations to say, here's how you get from the payroll report to the application, to really make it as simple as possible. So, like I said, we talked about this months past. Let's try to make it as easy as possible to get through the bank. They're looking at a lot of forms, they're looking at a lot of documentation, and we want to make that process as simple as possible. I will say, clients, we've seen it as little as 6 weeks, and they've gone from submitting to approval from the SBA. And ultimately what happens is the SBA will provide the funding to the bank, and that's the day that it's considered forgiven effectively. But you'll get those letters saying, hey, this is on the way. And then you can kind of rest easy from there. So a lot of different things. I just recommend coming back and talking to us. We've learned a lot. We've learned how to navigate some of this. We're working with some of the bankers and working through some of these situations. But it's definitely continues to be a work in process for sure.
It definitely does. And I think one of the things you mentioned, and I think we talked about maybe on our last webinar, is that they did make the rule if you have less than 50,000 that there's like a simple one-page form that you can do. The easy form, which isn't, you still have to submit information, but you don't have to do all those calculations for the FTEs or the safe harbor, the salary wage reduction if you meet certain safe harbors. So they did make it certainly somewhat easier. But like I said, sometimes the portals can be confusing where you think you have to fill out every box or put all the information in there when perhaps you don't.
Right, and actually it's a really good point, because if you looked at the EZ form, for example, it didn't have all those supplemental pages like the regular form does. And so payroll costs are one line item. But then what we're seeing is a lot of the banks, even though you might qualify for the EZ, they still want to have a box for the owner's wages versus a box for so then it'll still climb up. So that's why you're seeing these little nuances of information that you may have to provide that may not necessarily be required the way the form was originally written, but of course they still need to be able to verify that. So that's why it's coming back to trying to provide as easy a process, all the documentation in a way that they can, easily verify and move on.
No, definitely so. So then, is there anything that you've heard so far as if banks have been holding on to loans or forgiveness, hoping that the which we'll talk about a little bit later, like a higher threshold, or do you think banks are at this point, if they get the application for forgiveness, are trying to just process them through and get them to the SBA?
They are, from what I've been able to tell and talking to different bankers and some of the banks that we work closely with, they seem to be just trying, the ones that are open and accepting, they're trying to process it through just as however the process is currently laid out. And if it changes later on, that might have some changes to the way the bank approaches it. But for now, I've seen loans under 150,000 and loans under $1 million approved for forgiveness using the process that's in place. So I think they are trying to process them and get them through, and they've been filtering in, I think, seems fairly regularly for a lot of these. And at this point, there was people who were holding off, waiting, and perhaps if you're under 150,000, we'll talk about it in a few minutes, maybe you might want to wait a little bit longer to see what comes out of this new potential stimulus bill. But we're at the point of saying, hey, let's get through let's start applying, let's work through that process, let's get it moving. We think most of the issues are worked out and seem to be flowing pretty well. So I think if you've been waiting, I think now's the time to start thinking about it, subject to the conversation we might have here in a couple of minutes.
All right, cool. So one of the things that I know that we've been talking about, we had said prior to this, was the IRS had come out and said, hey, any of the expenses that you get the loan forgiven on are going to be non-deductible. And there was a lot of questions around that of, well, when are those expenses non-deductible? Is it the year that they were incurred, or is it the year the loan's forgiven? And as we get closer to year end, we already have seen there's a ton of loans that aren't going to be forgiven by calendar year end, like not even a question. So there was a lot of speculation that what we had heard coming down the pipeline from the IRS, they actually did official guidance right before November, Thanksgiving in November, and said, hey, here's your official revenue ruling that says the expenses are non-deductible in the year incurred. It doesn't matter when you get forgiveness. As long as you are certain that those expenses you can use in your loan forgiveness and get it loaned, you have to make them non-deductible. That's made our year-end tax planning really tricky because a lot of people said, well, I haven't got my loan forgiven yet. I don't have to pick this up until 2021. And under this guidance, no, you got to pick it up in 2020, particularly for corporations that bonus out a lot of their owners at year-end or doing things like that. We've had to kind of put this PPP loan back into perspective to say this is going to be taxable income, subject to the next conversation we'll have about possible changes to that. So want to make sure that everybody understands that when you're factoring in, especially for year-end tax planning, that PPP loan has to go back into income as far as, even though it says that is not true in the CARES Act, it basically is if you are using expenses, which are payroll costs, rent, utilities, those go back onto the bottom line. Even if your current balance sheet shows the load, you still got to put it back in there. So we just want to make sure that everybody kind of understands, as of today, that's the planning. Now, what we're hoping for is something will change because, as we talked about before, Congress didn't intend for this to be the case. They wanted this loan forgiveness to be tax-free. They just didn't write it completely the right way in the law to make that true. And so the IRS interpreted it under the code section that said this was not possible. But again, just factor this into your year-end planning. The IRS does also come out and say, hey, if something happens and you make those expenses non-deductible, and then your loan doesn't get forgiven, there's a safe harbor to go back and amend to take those expenses or to take them in the following year. And the same thing, and I have had this case where I had a client who didn't use all their loan proceeds. So they legitimately think, hey, I'm going to have to pay back some of this loan. Well, under that basis, they're only required to make the expenses non-deductible for the amount that they think is going to be forgiven. If something happens and the full amount becomes forgiven, which we don't think is going to be the case, they have a safe harbor under the IRS guidance to go back and amend without penalties. Basically to say like, hey, we ended up getting it forgiven. We didn't know it was going to happen. But I do foresee if this stands that we'll have a lot of returns filed very close to extension time. So March 15th or April 15th, or even recommended extending. If we think there's going to be a case, this is going to be a reversal, because we certainly don't want to do a lot of returns and have to go back and amend it and get refunds if we don't have to. One of the interesting things that has come up under this is if you are a sole proprietor, so you file a Schedule C, and you have no other employees. So let's pretend that you got your PPP loan 100% based off your net profit from your Schedule C, which was limited to $20,833, which was based off if you had a bottom line of 100K. So one of these questions that has come up is like, well, how do I make my expenses non-deductible on my Schedule C because I didn't have any expenses? And there's been no guidance issued related to this. Same thing with general partners. So if you have a partnership where they're not getting paid, which is correct, salaries, and they're just getting income allocated to them in a partnership, the same thing. They don't have expenses that are non-deductible. So as of this point, it seems like those two groups of filers are going to get away tax-free, unless the IRS comes out with some way to make it non-deductible. It is an interesting caveat to these rules. Again, it could not be a large amount because it's kind of capped at the $20,833 anyway. But it is interesting that they haven't really addressed that. So with that, Mike, can you kind of talk about like the new stimulus proposal and how that could change everything?
Yeah, absolutely. And it is interesting. It could make all of that conversation a moot point, perhaps, and frankly, it could be that as we're speaking, some of this could be changing, could flow through. It's one of those things that's, we've been talking about being fluid all year. Well, here's another one that we'll see. But so if you've paid attention to the news at all, you know that Congress has a lot of pressure to pass something, or they're putting on this pressure, and you keep hearing about let's get it done before Christmas. So will something get done? I don't know. It seems just based on reading and listening recently, there seems to be a lot of compromise. Well, within this stimulus bill, there's a whole bunch of other stuff, so I won't get into any of that. But as it relates to the PPP, within this is what everyone's referring to as basically a technical correction of the CARES Act to allow these expenses to be deductible, even though they're paid for by effectively a grant. And that was the whole thing from the beginning that Erin was talking about was, these are considered grants, and the IRS applied and said, hey, the law says the expenses paid for federal grants aren't deductible. Okay, we get that, but the CARES Act seemed to be pretty clear that this wasn't supposed to have a taxable impact. The money was supposed to be used, not 66% of the money or 65%, depending on your tax rate or whatever, but 100% was supposed to be used for payroll costs and rent and utilities and those things. And so this summary bill that we've seen does include a provision to allow this to be deductible. Again, that's a summary. The ultimate bill has to be viewed. I'm not going to sit here and say it's 100% guaranteed. We're optimistic, though, that it will go through, because really Congress has been talking about this since at least June, that in fact the bill was introduced into one of the committees in the Senate to fix this issue. And of course, politics and elections and all that kind of stuff got into the fray of things. So we are optimistic this is going to pass, but we have to really watch and see what happens, which will change all of the tax planning, all of the, all of those concerns and worries we've had for the last few months. So that's one piece. That's an exciting piece obviously from a business standpoint. They did introduce into that an improved process, a more streamlined process for loans under 150,000. I don't know what that's going to mean. I would suspect it'll be something closer to like what for the 50,000 and below now, where it's a very short form. You just put the amount in. You don't have to quantify FTEs and things of that nature that are that's on the easy form now. I suspect it would be something like that, but I don't have the details on what that might look like. So if you have a loan that's under 150,000, you might wait and see, hey, what is this going to look like? In a lot of ways, if you're in a very simple situation, you can still consider applying. I don't think it's overly burdensome depending on your situation, but it's something you can consider if you're under 150,000. Then the last thing, they are introducing more PPP monies. However, it's going to be focused on those businesses that were hardest hit. They have thresholds for reductions in revenue in a particular quarter compared to a previous quarter. Employees under 300, I think, is what the current number is. So there is the potential for more PPP funds for those businesses that are continuing to be hard hit and seeing revenue reductions. So from a business perspective, there's some really good things in this that we just have to keep our eyes on. Certainly, once something passes, once we have something, we'll be sending out information to let everybody know where they might stand, and then we'll be obviously happy to answer questions once we get through that. But for now, it's a wait and see what's going to happen, and hopefully we'll know in the next week or two.
Yeah, I mean, they have passed laws right before Christmas. It's not unheard of. And I know this is also somewhat tied, if I'm not mistaken, to like government spending, which they had recently extended in funding and all that. But I know there's a lot of also economic pressure for people to get something out there and not wait until the new Congress is in place after January. So we'll see. I am really, really hoping they make the expenses deductible. That will make life really, really easy. I will say that. And it would benefit a lot of clients, which is great. So kind of one of the next questions people have asked is like, hey, when's my first loan payment due? Because I've heard, and it's true, that I don't have to apply for forgiveness until the end of my term. Which is correct. So if you had your loan prior to June 5th, you have a 2-year term on your loan. If you applied after June 5th, you have a 5-year term. And the rules actually say you don't have to apply for forgiveness until before the end of your term. Now, the catch is you still got to make a payment, right? Like you don't get 5 years of no payments and then you wait and apply 5 years later. So the rule says that your first payment is due 10 months after your cover period ends. So kind of like what we talked about at the very beginning, a lot of people, if you'll recall, 8 weeks or 24 weeks, most people at this point are electing 24 weeks, unless for some reason they're going to have really heavy reductions in their loan forgiveness because they've had a high FTE reduction that doesn't meet an exception, or they've had a large salary or wage reduction. We've yet to see that really be like a huge issue. Most people, if that happened, there was reasons for it, and they weren't like they fired all their employees immediately after paying all the PPP money. But for the most part, people have used the 24-week period because, as you said, Mike, the payroll costs far well exceed the loan amount, because the loan amount was only 2.5 times the 2019 payroll plus other costs. 24 weeks gives you plenty of breathing room. And we've told people, you know, we kind of said use the full 24 weeks. It's kind of nice to see a loan application that has $500,000 of payroll costs for a $100,000 loan versus trying to make it exact. Like, give them as much breadth of room as possible on that piece of it. So just kind of want to reiterate that even though you may say, hey, I just want to wait to apply, why rush? Let them flush out all the rules. Perhaps the 150 will change things. You will have a payment due at some point. So don't forget about that piece. And then even only at 1%, you don't want to forget on that.
Right.
So then, Mike, I know we've talked about this kind of extensively in past, but can you kind of give us if there's any update or a synopsis for those people who are having to prepare financial statements with the PPP loan and they're having to submit them to a third party, like a bank, a vendor, or anything of that nature?
Yeah, and we have talked about this a little bit in the past, and there is some guidance, and actually the guidance gives you a little bit of flexibility depending on your situation. Most people have treated this exactly like it sounds like a loan. The PPP was a loan, it gets forgiven, and then when it's legally forgiven, that's when you actually take it into income. So if you have to supply financials to a bank or other organization, you've got to look at it and say, okay, what makes sense for me? And so what the standard setters under generally accepted accounting principles have come out and said, hey, you've got some different options. It comes to judgment, but first one is treat it as a loan. And now, when does legal forgiveness happen? Legal forgiveness happens when you get that letter from the SBA that says you are good to go, this is forgiven. At that point, which will probably for some companies be next year, you will take it in income, which means you're going to leave it on your financial statements, on your balance sheet as of 12/31. One of the things that we've been warning people to take a look at is make sure you're going to be good on debt covenants. If you've got debt covenant violations or anything like that, be talking to your lenders, be talking to whoever the users of the financials are early so they can understand that. Now, another option is to treat it as a grant. Now, there's no generally accepted accounting principles for this necessarily, but what the standard setters have alluded to or referred to as the international accounting standards to say, effectively, this is a grant. And if it's probable you're going to get forgiven, then you might be able to treat it as basically income as you are incurring the expenses, which for most companies would have been between April and say November, sometime in that time frame, maybe even into December a little bit. So you could actually recognize it over that period of time, and it would come off your balance sheet. You know, that's a policy issue. It's a judgment issue on how but you've got to be very confident that you're going to get it forgiven. That said, if you get it forgiven before the end of the year, you're going to treat it as income. So you've got a range of options there. Again, I suggest you come talk to us and see what the best way to go is on this, and the judgment, and you know how confident you are. Certainly if you had lots of FTE reductions and there's some uncertainty there, treating it as a loan is probably the better way to go just from a conservative standpoint. But that's something we'd want to talk through.
And just to clarify, Mike, for those who are listening who are like, I give financial statements to the bank, but what is this generally accepted accounting principles? If you're keeping your books on effectively cash basis or income tax basis, that deferred grant or it doesn't really make a difference on this piece. This is really if you're following GAAP or another type of step for financial statement. And just to reiterate, it has no effect on the tax return. So even though it may be a loan on your financial statements as of year end, right now those expenses would still be non-deductible regardless of what the financial statements say.
That's right.
Yeah. And so lastly, one of the big things that they talked about, and we had a lot of, I would call it news coverage and media back in May, was they said, oh my gosh, everybody took out this PPP loan and look at all these large corporations that took it out, and maybe they should have taken out. They had plenty of capital, and there was a big thing about turning the money back in if you didn't really meet the guidelines to take it of economic uncertainty. And Treasury ultimately came out and said, hey, we're going to solve this and say that no one's going to be audited or no one's going to have any questionnaires if you take out less than 2 million. When you make that certification on your loan application and you make that certification on your loan forgiveness application that you are facing economic uncertainty, we're good with that. However, if you got more than $2 million, you will be subject to a potential SBA audit to make sure you met those guidelines. And two, there may be additional information you have to fill out. Well, they finally released that draft questionnaire of what they are going to require anybody who got more than $2 million in PPP money to fill out. And it was a lot more extensive than I think a lot of us thought. It's already been, fought back against Treasury. This is too much information to ask. It's too leading the witness. One of the first questions they asked was comparing revenue by quarter. Did you really have, economic hard times? Did you really need the money? Which wasn't the intention of the loan in the first place. So this lender questionnaire, which again is in draft form, and you actually have to get from your bank to see what it is. They haven't really published it. What we recommend is if you got more than $2 million in PPP money and you get this questionnaire, which you then have 10 days to turn around and submit, that one, you make sure you have all of the documentation that as of the date you got the loan, you were facing economic uncertainty. Obviously, if we go back to that time in late March, early April, all of us were facing uncertainty of what the world was going to happen, right? The markets had just crashed. Everything was kind of coming up, but everybody's staying home. You can't go out to eat. It was crazy times. And so we had told a lot of our clients, and I think we said this repeatedly on our webinars, be documenting what your economic uncertainty is at this point. So if somebody ever comes back and says, did you really have it? You at least can say, look, this is what I was facing on May 1st, May 10th, May 15th. Here's what was going on. So what the AICPA has recommended is if you have this lender questionnaire and you have some of that documentation, or you want to write a document or memo to show what your economic uncertainty is, you may be best to submit that in addition to the questionnaire to really prove to the SBA, hey, I didn't just take this money to go on vacations and do all sorts of fun stuff, or to go purchase. I think one of the questions in the questionnaire says, did you make a lot of capital purchases this year? Basically, did you take my PPP money and go buy a bunch of equipment? So you really have to substantiate why you were at economic uncertainty. And we talked a lot about this and have consulted with clients a lot about this. But if you have to fill out this questionnaire and submit it, if they don't make any changes, we recommend that you talk to us, talk to your attorney, and make sure how you've completed it paints the exact right picture that you want the SBA to have to look at. Again, we kind of don't know what they're going to do with the information, right? So we don't know how that's going to play out. We just want to make sure that you don't just check boxes, send it in, that you don't want to get called back to say you shouldn't have taken the loan in the first place. So it's a bit scarier than we first anticipated on that piece, but we don't think it means you're going to have to pay it all back. It doesn't mean that you're fraud. It just means you may have to substantiate more than you originally thought you were going to. So we'll see how that goes. Yeah. Is there anything else, Mike, you can think of that we haven't covered?
Well, I just want to just jump on that one point for a minute, because you did mention this audit, this SBA audit that's going to happen. We're not exactly sure what this audit is even going to look like at this point, how intensive it will be. So we do have some clients that fall into the range of having a PPP that are over 2 million, and some have applied already for forgiveness, and we're going to learn some more and see what the SBA is, because there's not been a lot of documentation or a lot of guidance on that. And like you said with the form, it's a supplemental form. We don't know how much weight that's going to do, because clearly, some companies did still continue to do well after that, but we're still faced with this uncertainty back then, as you mentioned. So there's still a lot more to come in this area that we're going to have to learn and watch and see what happens.
Right. And as we talked before, a lot of companies have pipelines of work. And so they're already seeing some of that pipeline dry up, right? Which they kind of expected back in April when they did this and had their payroll, paid it. They knew the cushion was coming because they're probably going to have to let go people in Q1 or Q2 of 2021, unless something happens with the economy that refills their pipeline, people are spending money again. So it's hard because you only get what the news tells you, and it depends on which news station you're listening to for what information you're going to get. But I think a lot of people do have a fear that something's gonna have to turn with the economy in the future, or this will affect more than just it's already affected. And so you just again want to make sure you've documented it. So that you can substantiate and not have to pay it back when you did what you were supposed to do with it, which was spend it on payroll, right?
Mm-hmm.
That's a good thing. So again, we'll kind of close out with, if you have any questions, you know how to get a hold of us, info@jmco.com. You can find Micah or I on our website. We have still a pretty robust PPP website with lots of information, but as we've talked about, it's pretty fluid and things are changing. And of course, they could pass the law on December 23rd. You never know how that will happen, but Mike and I won't send out an email on Christmas. We do promise that.
Exactly. We'll leave you alone for one day.
We'll leave you alone for one day, but we do want to make sure that everybody knows that, you know, we're doing as much as we can to help you. And if things come up and are questions, we're happy to research it. We're happy to give you our best layer of advice. And so hopefully this has been a helpful kind of update on the information system. And hopefully we can have another update in a couple of weeks if they pass this stimulus act that kind of changes things or gives additional information on new PPP rounds or deductibility of expenses. So with that, we wish you well and happy holidays.